Hey, good afternoon, everybody. Welcome back. 10 minutes to close, Wednesday, November 4th, the day after the election. I've been quiet for the last couple of weeks because I just didn't want to influence anybody's um, stock moves. I didn't want people to overtrade. Um, I didn't want people to do too much going into the election. Um, and I've just had a lot of thoughts that I felt were either incomplete or just weren't ready to share. So, been quiet for the last little bit. We have enough out enough of an outcome with the election that the stock market has really made its move. Really, the main thing was the unwinding from the start of earnings season about 2 weeks ago, where all of the tech stocks started to sell off with the concern that if there was a blue wave, there would be tax hikes, especially on capital gains, and that would force people to sell the stocks that were way up in 2020, to sell them in 2020 and to book their capital gains in this year where they knew that the taxes would be lower. The outcome of the election with the mixed Senate, and now with either president, in the way that the House looks like it's going to form, just kind of mixed down the middle, that has cemented both the tax cuts and the fact that there just likely will not be aggressive tax changes, especially on the high growth stuff. And that's why we're seeing the NASDAQ up 4% today. Our portfolio is up right now. I mean, you can see this last month, it has been a brutal slide, and I've just stayed invested and haven't really touched it. Haven't really had anything to share with you guys. So this is what we're looking at right now. The portfolio of what we're holding. Just to check in and remind, we started at 41.7. We got up to 46.7. We've stayed fully invested. We actually went negative slightly to about a little under 41,000, I believe. And now we've recovered most of that, and now we're up. We started on September 10th. So, we're not too far. We're not quite 2 months into this. The first month was great. The second month has just been kind of waiting for the election to get over. Now we're seeing the resumption of two trends that we're heavily invested in, and that is high growth tech and housing. I'm expressing that view with the number one position being Zillow Group. I also own a real estate brokerage. We're seeing just a huge boom of new construction, and people moving around. Now it looks like we're going to be in work from anywhere with taxes that are likely the same as what we've been dealing with largely, and we have people moving all around the country, and a lot of them are buying new homes just because the existing homes, especially with the pandemic, has created a supply constraint. So we're just really seeing a ton of buyers pre-sale buy lots, and start people. The demand to move around is huge. That really benefits Zillow Group. They're just an app that sells basically connections with realtors. Realtors pay to be on the platform and to get connected with people that are looking to buy and sell, mostly looking to buy. So as people are moving around, Zillow Group becomes, it's just a platform that a lot of people go to first. A lot of realtors don't like it. It's kind of like the evil empire in real estate. But it's just an app that people use, and they use it with a tremendous at a tremendous rate. So Zillow is our top position. Square is number two. This was our number one position, but it has just been getting hammered for the last little bit. Square is a play that needs the stimulus to happen. And that's why when the stimulus went off the table at the same time as earnings started about 3 weeks ago, it really started a tremendous slide. Now it looks like we're going to get some type of deal. It's not going to be a crazy huge deal, which I think the stock market likes. The stock market was kind of nervous about too much of a bubble from a huge blue wave stimulus plan. It was nervous about getting nothing from a red wave, no stimulus plan. And the outcome that the market has gotten today is, it's a lame duck Congress. But the reality is they're kind of the same players are in play, and I think they're going to probably make a deal before Christmas, just to try to make the country just a morale boost. I think that's going to happen. I think we're going to get a deal and some type of stimulus. I think that's going to happen. Um, the government needs people to spend money on Christmas, and the numbers look dreadful so far. So I think that that money is going to keep come, and I think that now that the outcome looks like it's going to be mixed, not I think that they'll compromise. Maybe that's overly optimistic, but I still think that they all still need to repair their image a bunch on both sides of the aisle. So I think that that money will come. Um, Next position is AMD. One thing that you won't see in here is NVIDIA. NVIDIA is a position that's been a long time favorite. I've actually let it go over the last couple of days. Um, there's a couple of concerns there. First, they've missed the supply issues with delivering the 3000 series graphics cards has been really frustrating for a lot of people that are ready to get on board and buy those. And those are $500 to $1,500 graphics cards for your computer. So it's an enthusiast type of product, but there's a ton of brand loyalty that is in that ecosystem of gaming. There's a new generation of both graphics cards and processors that are coming out. AMD makes both. NVIDIA makes largely graphics processors. The market knew that AMD was coming for Intel with this next generation and was way ahead. That was an easy trade. AMD up, Intel down. The surprise over the last week is there's been benchmarks of the Radeon graphics cards that are coming out, which have always just sucked compared to NVIDIA. 2005, AMD was better than Intel. For the last 15 years, in my opinion, Intel has had an advantage over AMD, and it's really been, I've never preferred AMD graphics cards over NVIDIA cards. I started building computers personally in about 2000. So I've seen both these companies grow. I used to love the old AMD products, but I've been on Intel and I've been on NVIDIA for 15 years. What's happening now is NVIDIA has missed their window to drop. And now AMD is here with both their processors and graphics processors that now that NVIDIA hasn't, they should have gotten their hooks in me a month ago and sold me the 3080 that I want to buy, but it's been sold out constantly. And now that they've waited and these benchmarks have dropped over the last couple of days, that the Radeon cards are actually benchmarking as good or better than all of the NVIDIA product, which is a huge concern if AMD loses or gains share in GPU against NVIDIA. It's great for AMD. But that was a moat that I thought would be a little bit bigger. There's the market close. But I thought that gap would be quite a bit bigger for NVIDIA to get this. When they released these or announced these cards, they were people were really excited, and then they failed to deliver and get them out, which starts to build some criticism with the YouTube reviewers and all that BS. And now that they've waited so long, AMD within the next couple of days are going to drop their Zen 3 processors and all of their new Radeon stuff. And now that it's just as good, people have waited to make their decision. I think there's going to be a ton of pressure on Intel. And I think NVIDIA still has such a great data center business, and the demand for their cards will still be good, but it won't be as ideal as it was going to be if they would have launched this smoother. So AMD is one that I think at 100 times earnings and about $80. And it's one of my, I've been trading this one pretty aggressively in some other accounts. That's mostly what I've been doing for the last couple of weeks, is just trading in other accounts and letting this one kind of sit and not over trading it. But AMD, I think, is one that's going to go to $100. And in my portfolio, if I had to say what stock do you think is going to double in value next, it's AMD. So that's a top position now. NVIDIA, I have sold. I've kind of moved that around. Adobe, just workhorse. continues to be just a great product. I feel like 55 times earnings for the reliability of the earnings that Adobe provides with the growth upside is just a great tech stock. I'm waiting for that to split. Um, Taylor Morrison Homes, a favorite home builder. I think the home builders are going to have an exceptional 6, 9, 12-month run. There's no supply. Buyers are looking for houses that, if you live in your house, you're less likely to put on the market right now with the pandemic. You don't want the public walking through. You've got Thanksgiving coming up. You've got Christmas coming up. There's already enough pressure on those holidays with gathering and all of that stuff that people are not putting their house on the market. So we're seeing even more supply issues. And that's leading a lot of buyers to just look at the home builders and really consider new construction. As the buyer demo continues to turn over and go towards millennial and Z and whatever the generations are called, those generations largely are preferring new construction. And anybody that can deliver new homes over the next 6 to 9 months is going to have, even with the lumber prices and all of that stuff, it's fine. That's not as big of an input as you would think building a house. So Taylor Morrison, Toll Brothers, Lennar, those are all stocks. I think Lennar was one of the second best ones today. DocuSign. I mean, these are all housing stocks. DocuSign, Lennar, Toll, Taylor Morrison, and Zillow. That's all real estate. So DocuSign is kind of digital production, but I mean, the real estate world runs on DocuSign. So I think real estate is going to be a great area to invest. The other benefit is you can see like Toll Brothers and Lennar, they trade at 10, 13 times earnings. Taylor Morrison, 13 times earnings. If there is a rotation, if you hear the term barbell approach, what that means is you should own some stocks that are growth, like Square, and some stocks that are value, like the home builders. So that's kind of what I have here, is a barbell approach of having high growth on one side and value on the other. So I'm expressing the value side in real estate, and I'm expressing the growth side just in companies that I believe in. I think you're going to have a good little run here. I think Target, Lulu, Peloton, I think those are going to be stocks that are going to be holiday winners. They're going to be COVID winners. Either way, if any weird stuff goes down, I think that both of those are going to be poised to do well. If there's a stimulus package, both Lulu and Peloton are going to rip. So we'll target. I think the consumer is going to spend money, but I think this holiday season will be less people traveling to go see their family and more, let's pick out something nice from Lulu and send family member a nice gift and just send it over the internet. I think that's going to be a huge trend. I think Amazon's going to be huge. I'd like to get back in there if there's a dip. We'll probably reorganize this a little bit and get into some Amazon just because they're going to keep crushing it. They had a good day today. Speaking of which, let's hop over into the 5.75% today. That's great. NASDAQ was up. So we beat it by 2%, which is great. But we've honestly been kind of lagging and all over the place. The numbers are short term and they just don't matter as much, just because we've just been the COVID crash and the Fed bailout that was on March 23rd and this election outcome are now two binary outcomes that are, could go one way or the other, binary outcome, that we now have clarity on. And now that there's clarity on those and we have new normals, there's new assumptions to be made in the stock market. So that's good for stock pickers, and that's good for people that want to pick winners and losers and participate in the market like we do. So I think there's a ton of opportunity in the market right now, which is great and exciting. The last couple of weeks have just been kind of a fog of, if there was a real big blue wave, there was going to be a ton of pressure on the stock market in terms of a lot of these stocks just rushing to get their gains and losses, mostly the tax harvesting and the tax selling that was going to happen if that was the new set of assumptions made today, would have taken the market in another direction. And I think this more balanced outcome, even if contested, Because what's going to happen is the presidential race will contest, but the Senate and the House will come together and be clearer. And that's really, you know, that's really what drives the market. The market drives this current president the headline risk will move the market around short term, but really it's the composition of the House and the Senate that ultimately are going to drive the policy and what actually happens. I think what's going to happen here is both of these presidents, whoever wins, they have a Senate and a House that they're going to have to compromise to do anything. And I think the damage of traditional gridlock is very negative for, like, if they do that right now, they're ending their careers, and that's the last thing America wants. So America wants to come together and to stop hating each other, and we're going to expect it of our politicians more than I think we normally do. So I think what we're going to see, maybe that's being these guys are all full of shit. They just want to be approved of just enough to keep their jobs. So I think what's going to be required for them to keep their jobs over the next 2 years before the next House vote again is them cooperating a little bit more and being less political and pro-America in a way of, like, let's move the needle and get some stuff done. I think that's going to be going after Facebook and Google. It's a weird bipartisan issue that I think they both like. And that's going to be a hard trade. Both of those pop today on a new assumption that there won't be oversight on them. But man, I don't want to make that bet, because I think Facebook and Google are going to be put front and center as a pinata that both sides can swing at. So they had a great day today. I had been short Facebook pretty heavily from their last couple of announcements and made a nice chunk of change in the trading accounts. We might get into options next year. I just don't want to introduce too much stuff, and I like to kind of keep that for just being wild and taking too much risk, and just expressing my other assumptions in those accounts. I don't want to set a bad example for you guys. I'm really just trying to hunker down with this account, consolidate what I believe in, have an account that was going to work in either outcome. I really didn't want a big, I think that there was a chance, if there was a big change one way or the other, I think the shock would have been just towards, I guess of all the outcomes that were out there, I'm not disappointed in one that hopefully leads to more compromise. That's really all but at the end of the day, I just wanted to get a composition where they were going to have to work together, and pander to us right now, because that's what the country needs, is a little bit of pandering towards the people. This next bailout that comes, it better be delivered to the people, and it better not go to corporations again. And I think that that's what this outcome has led to, no matter who ends up being the president-elect for the next little bit, or going forward. So that's enough on the politics, but I think that there is nothing but upside here in markets. So I think you should have stayed fully invested. That's how I felt the whole time. Just stay invested, buy the dip if you have new money, and if you have fresh money today, continue to buy. Just buy the dip, add new money, buy what you believe, and when there's new assumptions to be made, like this portfolio that we have is not going to fall apart one way or the other based on the outcome of the election, but this was an outcome that was, we were positioned for. So it's we'll see how things shake out. There's lawsuits that we knew were going to happen with the outcome of the election, but they're going to scrutinize it and make sure that everything was legit, as it should be. I don't care what you think. We need to do whatever we can do to actually ensure the validity of our elections. And I know the political stuff pressures how you interpret the issues or what needs to be done. All I care about is if there's a better way to do things, we pursue the better way to do them. There definitely is a better way to vote, but one of the blessings of COVID was that, you know, election Tuesday is not normally a holiday, and a lot of people are just working and they just don't vote because it's not worth taking time off, or they just can't. And it's one of the benefits of having a lot more people at home, and you know, having access to either earlier voting or, you know, having a plan to be prepared and to be activated, and to be threatened that their voice wasn't going to be heard on either side, really activated people. And I think that that's great, and I think that we just need to continue to keep improving our process. And you know, I feel more positive now than I have in months, to be honest. So COVID's probably going to get worse, and we're going to find a way to get through it, and the medicine is going to show up. And it might be 6 months, it might be 12 months, but our country will heal and get back going, and we'll figure it out. I just don't think that this election outcome now, you know, and there's still going to be some turbulence coming, but I think there's so many of the negatives have now melted away, and there's a lot more opportunity out there than I feel like there could have been with other outcomes in either direction. So let's take a quick look at our countries today so we can see how other countries have reacted to our election. China really had a nice response, and Russia, that's interesting, and emerging markets. So this is definitely a growth trade. The Russian ETF is an interesting response. I'm going to have to dig on that a little bit more on why that's moving. Hopping into sectors, tech and bio crushed it. The growth stuff crushed it again because I think it was a lot of tax concern. I mean, a lot of these companies have doubled or tripled since March, and if you have a huge capital gain and you need to book it in this year or potentially pay a lot more in taxes next year, you're just gonna I thought if a blue wave came, what would happen with tech is things would rush up all the way into Christmas, and then there would just be a fire sale at the end of the year to book. Because if you're going to do that, if you're going to hustle the system and book your gains, why wouldn't you just do it to the maximum extent and just gas up stocks for the next 6 weeks and then sell everything into the new year? That's what I thought was going to happen. I didn't think there was going to be an overnight sell-off. Gold is... So here's what got crushed today with... I don't care how you look at it. The stock market is interpreting that the Republicans won the Senate and the House. Not for majority necessarily, but versus the expectation of what the market had baked in. The Republicans definitely did better in the House and in the Senate than the market was anticipating. I think the market was anticipating a toss-up for the presidency. The outcome of a little bit more conservative House and Senate is clean energy sold off today, solar, and gold and silver. The gold and silver trade is potentially just very crowded, and not to say it's over, but it's very crowded to the upside. And I think now that the assumption is the government they're going to make a deal for the stimulus, but it's not going to be the full-blown $3.5 trillion, but it will probably be another, $2 trillion or something like that. 2.5. I think we're going to get $2 more trillion. But it's a lot less than what it could have been. And gold is going to respond to inflation and the money printing. And this outcome that we got today is less money printing than if if the outcome was really a red wave or a blue wave, both sides would have spent like crazy because they get to reap all the rewards of the upside. Now that it's balanced, they're going to have to, it's just going to have to be that more balanced. So the stimulus is going to happen, but it's just going to be more than the Republicans wanted and less than the Democrats wanted. And they're going to, you know, that's going to keep, I think, a lot of the gold, silver. I mean, gold and silver got crushed today. I think that's going to keep those trades in big time check. What gold wanted is for there to be chaos and a ton more COVID issues that forced the Federal Reserve to respond and the Treasury to respond by just printing money, buying assets, and stimulating the economy. If things get better and are better than expected, the gold trade is over. So I'm just betting that things are going to get better quicker than people think. That doesn't mean it's going to go away. I'm still thinking 6 to 12 months for a lot of these sectors, but gold is like a generational, the economy is collapsing trade, and that is at all-time highs, and I'm really worried that it's crowded. So I don't like silver. I know people have made good money in silver, but I think that trade is crowded and done. I'd much rather be in tech, and I'd much rather be in housing. So, not to beat the same, dead horse, but what a terrible saying. But yeah, it's kind of what I wanted to share. We'll get back on track with the live streams and the podcast. Just haven't been in a spot where I wanted to share opinions that I felt like just weren't complete. So had a little bit to catch up on with you guys today on this one. Let's get one last check to see how this is kind of sorted around. So 5.77% day after the election. So we didn't mess it up too bad, guys. If we get a little bit more strength, we'll probably sell some of this at the top just to raise some cash and then to either open some other positions. I'm feeling a lot more comfortable maybe looking at some smaller cap stuff and some growth. Some small cap growth will be something that I'll start searching for. So I'll circle back on that. I hope everybody is having a good week. I know it's been a stressful run for everybody, but we gonna be all right. We come from savages, one way or the other. If you're alive in 2020, you came from somebody super tough. We're just, human beings are a lot tougher than what we give ourselves credit for. And we'll overcome all of our challenges short term. I always believe that. Like, this year has felt super dark, and I think a lot of that hope has melted for people, but we'll find it, because that's what we do. We will find a way to find something positive. I just think that, it's all about expectations, and people's expectations have gotten so negative and so low that I think that it's just inevitable before we start getting more positive news than negative in some fronts. The COVID stuff is really concerning in Europe. My heart goes out to all everybody that's being impacted health-wise and physically, mentally, financially, all of that stuff. But everybody's planning for this fall to just be a nightmare, this winter to be a nightmare. Maybe it won't be. Maybe people will be responsible or be more responsible, And if things on the margins are just a little bit better than what's baked in, and since the expectations are so low, I don't know. I think we have some runway here for some good energy. Maybe that's just super optimistic, but I think that we're going to rally into Christmas. I think that we have some clarity now, and there's been a lot of unnecessary selling for the last 3 weeks. And I think a lot of those people need to get these big tech stocks back on their books to not look stupid for their clients by the end of the year. And they're going to have a huge rush. So buy quality and stay invested. You got to always buy the dip. The only time you sell is, I mean, the only reason to ever sell is if the American empire is just collapsed. Other than that, the politicians are never going to let the stock market go too far. It's just, it means too much. It's not real enough to actually be able to fail. That's the bottom line. Either political party is not going to allow too much of a collapse on their watch. It's just, whether we have to pay for that in the short term, I mean, who knows? But the credit score of the average American has gone up in 2020. So there's been some silver linings, and we'll keep finding those silver linings. So that's enough for now. I hope you guys have a good week, and I'll check in soon.